Welcome back to my YouTube channel. So in this video we are going to do buyback of shares. There is an amendment, so this chapter is very important. Watch this video till the end. I'll clear all your doubts. Okay, so company, here there are two parties, company and shareholder, right? Company is the one buying the shares from its shareholders. Okay, company is the buyer. Okay, shareholder is selling the shares, so he is the seller. Ideally, when he is selling the shares, company will pay the amount to the shareholders, and that amount is taxable in the hands of shareholders. Till here though it is correct. So earlier, no, it was taxable in the hands of company only. Okay, whenever company is doing buyback, company used to pay the tax, and that would be exempt in the hands of shareholders. That was before. But after amendment, what happened? Company ke haath mein now it is not taxable, but in the hands of shareholders it is taxable. Now the question is, under which head it is taxable? Okay, so the law says whatever company, whenever company is paying any amount at the time of buyback, that should go and sit in the other sources. It is taxable, but under the head other sources. Company shall pay deduct TDS of 10%, and rest of the amount it pays to the shareholder, that will go and sit in your other source. Pura 100% of the amount will go and sit in your other source. Now the question is, shareholder must have purchased those shares at some point of time. In the past he must have purchased those shares, then whatever that cost. Okay, now that will go and sit in your capital gains, under the head capital gains. Full value of consideration is nil because entire amount you have taken to other sources. Now full value of consideration is nil, and whatever cost incurred to shareholders in the past to purchase the shares will be a loss under the capital gains always. So this loss you can set off with any other gains. If that SSE has any other capital gain, then he can set off this loss with those gains. Okay, but he cannot set off with other heads of income. Okay, capital gains losses you cannot set off with other heads of income. Okay, now this income from other source 100% will be taxable under the head income from other source. Okay, any amount received by company will be treated as taxes under the head income from other sources. Okay, that's how it is bifurcated. Your cost will go and sit in your capital gains as a loss, and your sale proceeds will come and sit in your income from other sources. That is the amendment. You got the point? Perfect. So earlier you must have studied under deemed dividend concept. There are 222A, 222B, C, D and E. Now there is an additional section which is added, 222F, which says a company making any payment on buyback of shares to its shareholders will be treated as deemed dividend. See, understand, अगर कंपनी को डिविडेंड देना होता तो it will give from its accumulated profits. So when it's doing its buyback, also it is giving it from accumulated profits only. Okay, since earlier under buyback the rate was only 20%, so few companies what they used to do is, instead of giving dividends, they used to issue buyback. Okay, so because of those few people, what the law, what the amendment says is, now even if you are giving buyback of shares, no, treat that as a deemed dividend only, and the entire amount will be taxable in the hands of shareholder only. Okay, वो कॉस्ट का बेनिफिट भी नहीं दिया. ठीक है, अगर एसएससी को कैपिटल गेन्स में कोई और कैपिटल गेन नहीं है, then this will be carry forward to future years. He cannot utilize that purchased amount only. Okay, so entire amount will be taxable in the hands of other sources only. Okay, I hope this video made some sense, and अगर अच्छा लगा तो please do like and share with your friends. See you all in another video. Let's go.